So Target CEO succession getting more attention than its results this morning. After more than 11 years as CEO, Brian Cornell will transition to executive chairman at the end of the fiscal year, so February 1st. Current COO, former CFO, and 20-year Target veteran Michael Fiddelke will take the top job in February. Fiddelke told reporters, I'm, quote, stepping in with urgency to rebuild momentum and return to profitable growth. He's got three priorities. He says, first, we have to lead with merchandise beyond the occasional design partnership. Two, we have to create a consistent experience for shoppers. And then third, use technology better to improve speed and efficiency. He focused a lot of his discussion with reporters around urgency and moving faster. Now, Fiddelke has work to do, to be sure, to get back to growth. Target has had a rough several years post-pandemic highs. Comparable sales have been inconsistent in-store and online. Operating margin is a little over 5%. That's well below the 8.4% peak in 2022. Shares down 22% this year. Now, under Cornell, the retailer has had inventory missteps. It took and then changed positions on a number of political and cultural issues that generated boycotts on both sides and hits to traffic and sales. But Cornell has overseen $34 billion in revenue growth since 2014, the growth of its private brand portfolio. It acquired Shipt. It transformed the shipping and distribution network to speed up shipping and many same-day options. Cornell leaned into stores. He really invested in these tired locations. He built out a network of small formats, and this was when competitors were closing doors. It was met with a lot of skepticism at the time, but turned out actually to be somewhat helpful. Now, shares have grown 81% under Cornell's tenure, but that's compared to 96% growth in the XRT retail ETF in the same time. 150% gain for shares of Best Buy, 309% for Walmart, almost 400% growth in shares of TJX, which likely has also taken some share, too. Kohl's, Macy's, Gap, they've all fallen. Macy's down 78%, Kohl's 76%, and 51% downshift in shares of the Gap in that time. Now, Target also did put up a slight beat on earnings and revenues, comparable sales, too, although all three were below last year's level. Traffic and sales, they did accelerate from the prior quarter, but traffic and transactions are below last year. And when asked about prices, executives at Target told reporters that only raising prices, if they have to do that, that's the last resort. Inventory up about 2%, and Target is maintaining its full-year guidance for low single-digit declines in sales and reaffirming this very wide earnings forecast of $7 to $9 adjusted. Digital sales did grow 4.3% in the quarter. Those also have been up and down over the last several quarters.